All right, starting off with the most famous commodity in the world, gold. 1736.13. Now we can see the big sell-off that we got and so on. Now the seasonal moves, the swing moves of September, October are fast approaching. We're in the EOM period for this month. Now let's quickly recap how this week started off, the confirmations that we got, and certain areas that market price should have broken if the asset price would have, continued towards the bullish side into current Friday. I know this is after the fact, but market speculations and biases are going to be included in this simple goal tutorial. Let's begin. First and foremost, we should identify the opening of the week, the range that kickstarted everything. That's the first thing we're going to do. And I've been stressing this to so many of the traders in the group, so many of them, showing them the vast importance of marking out the Sunday open. And I'm going to pull it across the Sunday opening high. Okay. I'm going to also mark and pull across the Sunday opening low for gold. Okay. All the way to where we're at currently for this week. So let me just pull it across all the way. I would have often used a horizontal line in the past, but as they get better at the technical analysis, you just use trend lines more often. It gives you that level of refinement. Now, as you can see, we were still inside of that impulsive sell that was ongoing from the previous trading week. Last week was a brilliant week for you if you had sold gold and held on. Asset price kept going. Now, as was pointed out by one of our fellow admins, the 2 days in the week that you can expect asset price to set the high or low of that trading week are either Monday or Tuesday. So we got the low on Monday. And if you take close attention, I'm going to go on the M15 chart now. We saw that the market price started to accumulate right around here while paying respect to the low that asset price had established on Monday. So the accumulation continued on an intraday perspective, okay? And we saw market price heading into Tuesday, impulsive move. Let's recap everything that took place. Price to trace back, another impulsive move, and the asset price came crashing back down hard. Now, this would have caused an inducement. Undoubtedly, many persons would have chased this. For my student subscribers, just those who view my channel, you cannot see an impulsive move this strong. And while it is ongoing, at the late stages, because it started from here and got even stronger here, you went and chased it. You'll be caught in the market inducement and you'll be, in this case, selling at a discounted price with a price going back into buy side liquidity. So you would be putting yourself at a disadvantage because many persons who caught this buy and took profit here, they saw the opportunity to enter one more buy upon market price doing this because the low that was set from Monday was not broken. And then flash forward, Tuesday came on the scene and set our highest area for the trading week. Our highest area. Now, pay close attention. This is our Sunday opening high and low. Tuesday, upon gaining the liquidity that it needed, shoot through it very hard, but we didn't get a true break. We should have seen price stayed above this level. And if price was truly going to continue to go up, we should have seen, as I said, price stay above this level, but price then re-entered, one more run of accumulation, and then price just ranged about on Wednesday. All right. And we saw that the low of Tuesday and the lowest area set from the start of the week was respected. So right around here, Wednesday, daily low, we saw that price was definitely accumulating. Now notice the key factor. Price came up above, and then we saw the bodies of the candlesticks. And I really zoom in on right here. The bodies of the candlesticks started to stay above. So this was our big evidence at Thursday. A bull push was coming because we stayed above Sunday's opening. And now take a look at the subsequent result of that from the early onslaught of the Asian session. We saw market price give us that impulsive move. Reach the high for the day at the time at the Asian session high. And New York session came on the scene. This is the opening of the New York session, 7 o'clock. And then we saw price respected that high and begin to sell off. So now Thursday would have set the brand new high for the week. And many persons would be saying to themselves, all right, if the asset price, for those who are following, stayed above Sunday's opening, then we could argue a continuation of the buy-off, right? Now, here comes the very first candlestick that kick-started Friday. We're at the start of the Asian session, so let's do the full markup here, catch the entire range. And let's even add our deviation points. And you guys can simplify this to suit you. So Asian session gave us a pip move for around 66 pips. So would have gone through now and look for either a follow-up or a complete wipeout of the pip gains made from Asian session for the next two sessions in the day. London and New York respectively. We're gonna see which side market price can feel. So Asian session came to an end. So this is London. Right here, so is where New York would have started. So everything, so all of this impulsive move would have been our London session. So now, quickly, mark out our London liquidity range. And we saw that market price at the start of New York session continued the impulsive move, right? So we saw the London liquidity range low being broken. But then all of a sudden, upon filling one deviation box going into the next one, we saw price, at that time, let's start a New York session, not continue to go down. At which point would be gearing up for the next impulsive move at 8 o'clock. So those who sold at the low of this impulse, they were at a serious disadvantage. They were against the algorithm. Now market price went, and this is simplicity. So this would have been first wave, risk one, shot up very hard. Those on risk one entry undoubtedly would have gotten stopped out. And this would have been the justification entry, and persons would have bought. Now, to constitute a continuation of the buy-off, the market price would have to break the London liquidity range high. Price came, saw price accumulate, but then drew that swing all the way back down. Let's see what time that took place. Let's see if we're keeping up with the time formula. So around 16:30 it started. Then we got the impulse. And the next impulse time would be 10 o'clock. See? Right on it. So our time formula is matching up. Price came back down. We didn't get a true break of what would have been the previous low. We just saw price pierce through it. We should have seen candlesticks bodies close below it to constitute that it's gonna head down at the time. But we're watching. So price then did the same thing again, but with one candlestick. Notice right here earlier, he did a lot of candlesticks to send the move up. But then upon sending it back down, he just used one 5-minute candlestick to do the same thing that took place earlier here and here. You have to have your wits about you when you're trading gold. I kid you not. Now, as I pointed out, this is the Asian high. You need to at least see an Asian session high get broken for you to even think that market price can fill the top side deviation, but then take out the what? Daily high of Thursday to give you evidence of market price going higher. So far, from New York session has started, we haven't gotten any evidence of that. And you know, it's 1:28 New York time now. It's becoming painfully apparent we're not going bullish. Our conditions have even died down now. So last impulsive time for the day, 1900, lunchtime. Take a look. So price fail for take out the London liquidity high. So everything from earlier US session has been wiped out. So we got a bullish impulse, bearish impulse, New York session, price wipe out. This type of analysis, doing everything step by step, having everything set in place, essentially prepares you, the Forex trader, for a confirmation style trading. If you're bullish, you need to see evidence of that. If you're bearish, you need to see evidence of that. What did you get? You get a pullback, but the evidence came through. Market price is not going higher. So persons who even caught this buy move had to immediately switch gear and sell. And that's exactly what happened. Market price went down. Now to take a look on a higher time frame, if we see the low of August get respected, and then September comes on the scene, September open, we see price, start to print back higher lows, then we can look for a strong push potentially that is going to wipe out, the high that was made earlier at 1807. So I know a lot of persons have already jumped in on their buys and are currently holding. But please exercise caution and risk management and do what is needed to get your confirmation. Without confirmation and risk management, it makes absolutely no sense you place a trade, because you as a Forex trader have to make a log of trades that go right for you versus those that go wrong. The overall thing about Forex is the multiplex structures. Market price is looking for liquidity, right? So if you can identify where the liquidity is at on the chart, it gives you a better vantage point as to where to navigate. I clearly saw that market price, and you guys can see it from the earlier part of this tutorial, or market price reacted around the Sunday open, this entire range. Let's go back to the M15 chart and zoom out. This entire range since the start of the week, or price was reacted in that liquidity area. We briefly got above the Sunday open, but as time went by, we saw price not only respect Thursday's high, but ultimately failed to go higher, and then re-entered back into the Sunday open, and then is now below the Sunday opening low. So that's it. So price went both for this week, bullish and bearish. A complete wipeout of the gains for every single person who never collected their money, who entered from Monday and held on all the way to Thursday. All right? Fridays can be that dangerous. Hope this assisted you all, and stay tuned for the other upcoming videos on this channel. Don't forget to like, comment, and subscribe. Links to the groups shall be in the description box below. Peace be.